Hello and welcome. Today, we're going to dive into a subject that affects pretty much all of us, but can feel, super complicated: personal income tax. It seems like a maze, but it's also a really fascinating window into how different countries operate and what they care about. So, yeah, let's get into it. Right? You get your paycheck, you see that line for income tax, and it's just this number. It feels like a total black box. How on earth did they land on that exact amount? And what happens to that money after it vanishes from your pay? Well, you are definitely not alone in wondering that. So to kind of pull back the curtain on the whole thing, we're going to try something a little different. Instead of just throwing a bunch of facts at you, we are literally going to build a tax system, piece by piece, right from the very beginning. And by the end, you'll see how these few simple building blocks can create all the wildly different systems you see around the world. So here's the game plan. We'll start with the blueprint, the basic building blocks. Then we'll take a quick trip around the world to see how different countries put those blocks together. We'll also look at the different layers of tax, because it's not always just one. And finally, we'll step back and ask what these systems really tell us about a country's priorities. It's going to be fun. Okay, first things first. Before we can start comparing countries and their different approaches, we have to get a handle on the one core concept that's behind almost every modern income tax system out there. And that key idea is called progressive taxation. All it means is that as your income goes up, the percentage of tax you pay also goes up. But here's the thing, and this is the part that trips a lot of people up. You don't pay your highest tax rate on your entire income, not even close. Instead, your income gets sliced up into these different buckets, or brackets. Each bucket gets taxed at its own rate. So let's say you make $50,000. The first 10 grand is taxed at 10%. The next chunk, all the way up to 40 grand, is taxed at 20%. And only the money you earn above $40,000 gets hit with that top 30% rate. So when you add up the tax from each of those buckets, the total tax on that $50,000 income works out to $10,000. That means your effective tax rate, the actual percentage of your total income you paid in taxes, is 20%. See? It's way lower than that scary-sounding 30% top rate. All right, now that we've got our basic blueprint, let's go on a bit of a world tour. It's time to see how different countries take these exact same building blocks and construct something totally unique. First up, we're headed to Canada. Now, Canada uses a system that looks a lot like the simple model we just built. It's what you might call a classic textbook example of a progressive bracket system at the federal level. And here it is. You can see it clear as day, those steps going up. As someone's income climbs into a new bracket, it's only the amount in that new bracket that gets taxed at the higher rate. It's our blueprint, just out in the wild. But not everyone does it this way, not by a long shot. For a totally different approach, let's pop over to Germany. They get to the same progressive results, but they throw out the idea of simple brackets and use, well, a formula. Whoa, okay, don't worry. I promise there is no quiz at the end of this. You absolutely do not need to solve this. The whole point is just to show you that instead of steps, Germany uses a continuous math formula. This means there are no hard jumps between brackets. Instead, your tax rate just smoothly inches up with every single extra euro you earn. It's a completely different way to climb the same mountain. Okay, for our third and final model, let's head down to Italy. Now, Italy starts with brackets, kind of like Canada's. But that is just the opening act. The real story there is how the system is shaped by a huge, complex web of tax credits and special allowances. And this is a fantastic example of another way to build a system. Instead of just playing with the rates and brackets, Italy fine-tunes what you actually owe based on your specific life situation. Are you married? Do you have kids? Are you taking care of other relatives? Are you a retiree? Each one of these things, and a whole lot more, changes the final tax bill. So we've seen how countries build their national systems. But hold on, that's often only one piece of the puzzle. For a ton of people around the world, the tax that comes out of their paycheck is actually a combo of taxes from different levels of government. You can think of it in two main layers. You've got the big one, the central or federal government tax. That's what we've been looking at so far. But then, on top of that, many countries have a second layer, sub-central taxes. These are extra income taxes charged by your state, your province, or sometimes even your city. And this is a really big deal. It means that two people who earn the exact same salary in the exact same country can end up with totally different amounts of take-home pay, all because they live in different states or provinces. I mean, just look at this example from Canada again. For the first 50 grand or so of income, someone living in Quebec pays a 14% provincial tax. But if they lived in Ontario, they'd pay just over 5%.
That is a massive difference and really shows how much your zip code can affect your bottom line. So, we've built a system from scratch, we've seen how different countries use the pieces, we've added in the extra layers. What does it all mean? When you zoom out from all these details, what is a tax system really telling us? Well, the thing is, all these little details, the weird formulas, the number of brackets, the specific credits a country offers, they're not random, not at all. They are the result of conscious choices made over many, many years that reflect a country's unique history, its economy, and its core values. This quote really gets to the heart of it. A tax code isn't just a boring government document for raising money. It's a statement. It's a mirror showing what that society truly prioritizes. I mean, think back to the countries we just visited. A country with really steep progressive brackets is basically signaling that fighting income inequality is a major priority for them. A place like Italy, with that huge web of family credits, is clearly sending a message that it wants to support households with kids and other dependents. Every design choice tells a story. And that really brings us to the biggest takeaway of all. There's no such thing as one best or perfect tax system. It just doesn't exist. Every single decision is a trade-off. A system that's designed to be super simple might not be seen as the most fair, and one designed to be perfectly fair might end up being incredibly complex. It is always, always a balancing act. So the next time you look at your paycheck, maybe you'll see more than just a number. You'll see the end result of a long journey, built from choices and priorities. And it leaves us all with a pretty big question to think about. What do we think is the most important goal for a tax system? Is it simplicity? Is it fairness? Or is it economic growth? There's no easy answer, just a world of fascinating choices.